This is why the broker selling this business deserves a fish slap. This is this week's episode of Would I Buy This Business? Okay, so this was a business I inquired on 1 year ago in 2025. It's a shutter installation business. At face value, it looks like a relatively healthy business with $2.3 million in revenue. The asking price is $2.95 plus stock. And the estimated stock value is $500,000. So already we're looking here at a $3.45 million investment at the asking price. What I find is really weird is what this broker has done and has said estimated setup cost of the business if you were to do so today. Well, then they've listed a price of just $250,000. So I don't know why they are promoting that as seemingly a positive thing. That doesn't make any sense. And then we have the estimated current value of included plant and equipment, $150,000. So this is about 5% of the total asking price of $3 million, excluding stock, which is made up of tangible assets. So this is a 95% goodwill transaction. So that already is a little bit of a concern. Let's move to, hope you guys can see that, the revenue trend of this business. This is the first really big red flag. This is in 2025, like at the end of the financial year, and we've got numbers that only go up to 2024. We don't even have management accounts or any representation of how 2025 has performed. So to me, this is, number one, quite lazy from the seller and the broker, and also suggests the business has been on the market for quite a while, because the last set of numbers we've got is from a year ago or over a year ago. So let's have a look here at the revenue and gross profit. So revenue 1.7, and then a really big jump up from FY22 into FY23 to 2.3, and then a small jump up again in 24 to 2.37. So that's quite a nice trajectory. That's good. Looking at the gross profit, we're at 60% in FY22, a huge jump up by 12% into FY23. So this is something that needs further investigating. What has caused this very positive increase in gross profit? And is that sustainable, or is that an anomaly? Now, it looks to be very sustainable because we are seeing 71% in FY24 compared to FY23 of 72%. So there's some nice consistency there. So overall, this is telling us a good story. However, where things get a little bit hairy is in the operating expenses. The operating expenses in FY23 have increased from $692,000 to $838,000. That's a significant increase in operating expenses when we're not seeing a like-for-like increase in the top line revenue. So this is telling us that the business is just absorbing operating expenses. It could be an increase to a number of fixed expenses, but most probably it's an increase to labor, administrative labor. So again, this is something we really need to look into and understand what's going to be maintainable moving forward. Has this increase further continued into FY25? Okay, this is where things get really frustrating and irritating, because if you notice down here, it says total earnings. I think my head's blocking it out. Total earnings, EBITDA. Now, what that stands for is proprietor's earnings before interest, tax, depreciation, and amortization. So that essentially means that this number, the 920,000, is the profit plus the owner's salary. But the owner is working full-time in the business. So this is useful for the bank because they will look at total serviceability based on what the owner will receive working in the business plus the profit. But from a fundamental standpoint, from an investment standpoint, I'm not interested in the owner's salary. And I'm certainly not interested in paying a multiple of the owner's salary, because I can go and get a job for free. So if the owner's salary is $150,000, why would I be paying a multiple on that when I can get a $150,000 job relatively easily? But this is the way that I would be looking at this from an investment standpoint, because I'm going to take the PBITDA in the last 3 years, And then I'm going to allow for the replacement cost of the owner, which I've allowed as a notional sum of $150,000 for the last 3 years each year. Because I need to go in there, make sure that the cost of that owner's role is expensed in the business. It's not my money. I'm not going to go in there and work full time in this business. In reality, probably getting someone who is suitable to replace the owner would even cost more than this, because you've got to remember the owner will do a lot more than simply what a general manager on $150,000 would do. So I need to probably factor that in as well. So just for the purpose of this exercise, we're just sticking with $150,000 as a notional sum. So the cookie cutter approach here again is to look at the 3-year average. So the 3-year average is $655,000. Now remember, what the broker is peddling here is a PBITDA of $920,000. So there's a big difference there. But I'm going to be generous. And because FY23 and FY24 have clearly outperformed FY22 and demonstrated that it's relatively maintainable, or the trade is relatively maintainable at that level of performance. So I'm going to use a 2-year average. So I'm going to presume that the underlying profit of this business is $816,000 after replacing the cost of the owner. Now let's compare that and see how that stacks up to the asking price. Well, we have an asking price here, including stock, because stock matters. It's the total investment that you need to go into the business. So the asking price, including stock, is $3.45 million. Now, how does this actually stack up from an investment standpoint? Well, really, really, really badly. So this represents a multiple rate of 4.22, which is absolutely insane for a maintainable business earnings between $500,000 and $1 million, $500,000 and $1 million. And it represents a return on investment pre-tax of 23.7%. This is not a good example of a good business that makes much sense to buy. Post-tax, if we factor in post-tax, and if we factor this in at a rate of 25%, company tax rate of 25%, we're looking at a post-tax return of 5.28 times. So that's, basically 5.25 years to get your money back. Well, I won't be buying this business. I would rather park my capital somewhere else into a business that's more attractive. But there's a good reason why this business has been on the market, and it's because of the price. And this is a really good example of where business broking is really broken, because brokers are telling sellers what they want to hear to get the listing. I 100% guarantee you the seller has told the broker, I want to get $3 million plus stock for this business. And the broker has said, sure, let's give it a try, without giving them any advice, bringing them back to earth and saying that's not realistic. And I guarantee this business has been sitting on the market now for at least 12 months and unfortunately has been tested by the market and has failed.